Senator Smith.
Thank you, Mr. Chair and Ranking Member, and thank you, Chair Powell, for being with us today. I appreciate your presence here. I'd like to start with the issue of the rising cost of home ownership, something that I know is of great interest to many of my colleagues on this committee. I know, Mr. Chair, that you care a lot about home ownership and making home ownership accessible and available to folks. My colleague, Senator Lummis, as well, many of the folks on my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of home ownership is a big challenge for our constituents, for Americans. And one of the big pressures, there are many, but one of the big pressures is the rising cost of home insurance. In Minnesota, families, seniors are struggling to manage a nearly 40% increase in home insurance rates. We've seen this over the last 7 years or so. And I know, Chair Powell, that you've told this committee in the past that that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding in the southeastern United States. We've seen flooding in Minnesota. We've seen fires in the Mountain West in California. These are climate-related events. That's not a political position. That is just a fact. So, we've got banks that of course, require, understandably, that a homeowner provide insurance as a predicate for getting a mortgage. So there's a big question about what's going to happen when insurance becomes unaffordable, or in some parts of the country, just literally not available, and what impact that would have on the mortgage markets, on the value of American homes. Just last week, a new analysis from First Street showed that overall, the value of U.S. real estate could be reduced by $1.4 trillion, colleagues, over the next 30 years due to unaccounted for climate risk. That's the cost, the risk of not being able to afford home insurance because of these extreme weather events. And the prospect of trillions of dollars of property become uninsurable is clearly a recipe, it seems to me, for market instability, both in the rental as well as the mortgage market. So my question, Chair Powell, is, given these trends, how do you think the Fed and how do you think we should be thinking about the challenges that these events are going to pose to insurance markets and to the overall financial stability of the economy? I'm asking you to comment specifically on climate change, because I understand my colleagues on the other side of the aisle see that as a political question. It's more like what you see as the risk to financial stability here.
So let me quickly note that we don't regulate or supervise insurance companies for the most part, but we're seeing the same thing, which is both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage, there won't be ATMs, there won't, the banks won't have branches and things like that. Right. That's a possibility coming up down the road. It's not that the banks will stay there and keep making loans in the face of evidence of disaster, or that insurance companies will do right policies. They can cancel those policies every year. Right. So I think the risk is that they just won't be there and that people won't be able to get them. That's really the issue.
And it seems to me that that would be a massive source of instability in our economy overall if you were to see that kind of dramatic decline in home ownership, home values, not to mention the disruption that would occur if people literally couldn't be in their homes anymore.
So I think it's going to fall, if that happens, it'll fall on homeowners and
right.
residents, but it'll also fall on state and local governments, which you see happening now, where they're stepping in states where insurance is going away, private insurance. You're seeing states step in because they want those areas to remain prosperous. So I don't know that it's a financial stability issue, but it certainly will have significant economic consequences.
Well, certainly to try to figure out how to provide reinsurance, as an example, in the places where commercial insurance isn't available would be a massive impact on state budgets, if to follow your chain of thinking. And I know in this committee, I've heard some of my colleagues on both sides of the aisle talk about the challenges overall with flood insurance, just as an example, and the massive expense that would have for us as well. I raise this, colleagues, because I think that this is an important issue that we need to be paying attention to. I do think it has a fundamental impact on the overall health of our economy as we look not even down the road, but where we are right now. So I'm out of time. Thank you, Chair Powell. I have a question. You and I have talked quite frequently about my deep and keen interest in the Community Reinvestment Act, and I'll follow up with a question on that for the record.